Hi, welcome to Arkintel. The world expected chaos in the markets after the new US tariffs were announced, and chaos came, but not in the way anyone predicted. It wasn't stocks that took the hit, it was the US dollar. That's not supposed to happen. In times of crises, money usually floods into the US, seen as the safest place on earth to park capital. But this time, it fled. For the first time in decades, investors ran away from America for safety. And that single moment exposed something far deeper than a trade war. It revealed a growing fear that US debt isn't just high, it's starting to look dangerous. So, what just happened? And why did trust in the dollar suddenly crack? And what does it mean for the future of the global economy? Let's break it down. The United States has been spending more than it collects for over 20 years straight. The result? A federal budget deficit every single year. In 2020 alone, that gap was $1.8 trillion. That 1 year was just layered on top of the massive shortfalls that came before it, creating a towering national debt. Now, to really understand the scale, you can't just look at the raw dollar amount. You have to compare it to the size of the economy. Today, US debt as a share of GDP has climbed back to levels not seen since World War II. But back then, we were fighting a global conflict. Now, we are not. And just like in the 1940s, the government still sells bonds to finance its spending. But instead of patriotic ads urging Americans to buy a bond, those securities are quietly auctioned off to private investors, foreign governments, banks, and pension funds. Now, here's the part most people miss. Not all debt is harmful. In fact, government debt plays a crucial role in global finance. It provides low-risk options for savers and acts as a cushion during crises, like in 2020 when borrowing helped the country avoid total collapse during the pandemic. But borrowing doesn't stop when the crisis ends, and that's the problem. When debt gets too large, it starts choking the economy in ways most people never see. Every dollar that flows into treasury bonds is a dollar that doesn't go into productive investments like new businesses, home loans, or innovation. In 2024, the US government paid more on interest than it spent on the entire military. Yes, interest payments alone cost more than funding the Department of Defense. And here's the kicker. If interest rates rise just 1% point more than expected, that would add another $300 billion per year in borrowing costs. We are not just borrowing to spend anymore. We are borrowing to pay off old interest. That's like using a new credit card to pay off your last one. So, how much debt is too much? Economists warn that if publicly held debt reaches about 175% of GDP, things start to get dangerous. Go beyond 200%, and the math simply doesn't work anymore. You wouldn't be able to raise taxes fast enough to keep up with interest payments. The system would seize. At that stage, even modest increases in interest rates could trigger a financial meltdown. That's not theoretical. It's what happened in Greece and Portugal during their sovereign debt crises. Once confidence collapses, the dominoes fall quickly. Investors demand higher returns. Interest costs explode. Growth slows. Tax revenue drops. You get stuck in a downward spiral of austerity and recession. And when that happens, there are no easy ways out. Even scarier, the unraveling could begin long before we reach those debt-to-GDP thresholds. It could start the moment global markets lose faith in Washington's ability or willingness to act. You might think, well, I'm not buying treasury bonds. Why should I care? You should care because when rates on government bonds rise, everything else does too. Mortgage rates go up, credit card APRs rise, business loans become more expensive, even the safest corporate bonds see their yields climb. It becomes harder to borrow, growth slows, jobs disappear. And all of that starts with a crack in the confidence behind one thing: the full faith and credit of the United States. After the tariff announcement, that crack showed, and if it continues to spread, this economic pain could hit every household. Some argue that we can grow our way out of this, boost GDP, raise incomes. AI, artificial intelligence, is here to help. Let the inflation and expansion shrink the debt burden over time. But there is a catch. Most federal spending already scales with economic growth. As people earn more, they qualify for more benefits. The system expands with them. You don't fix this by growing the economy. You can't. You fix the economy by first solving the fiscal crisis. That means spending less, reforming programs that are running out of cash, putting real caps on discretionary spending, and yes, looking at military budgets, healthcare, social security, and tax policy, all at once. It won't be popular, but every economist worth their salt agrees this isn't optional, it's necessary. So, is the US national debt an urgent crisis? Not today, not yet. But that's the danger. It creeps quietly until the moment it doesn't, and then suddenly it's too late to act. The smart move isn't to find out how long we can delay. It's to fix the problem now, right now, while we still have room to maneuver. Because once the tipping point hits, there is no safe exit. If you found this breakdown helpful, make sure to check out the US Big Lie. In this video, we expose the big lie behind the US oil industry, revealing how Wall Street manipulation, fracking decline, and dwindling reserves are setting up an inevitable collapse. Click the video to watch now.